Why is DocuSign stock down, and should you sell your DocuSign stock now and take a loss? Before I share with you my DocuSign stock analysis, if you are new to this channel, my name is Linus, and in this channel I share all things related to the stock market, so both investing and trading. If you want more videos such as this, make sure you subscribe to my channel because each week I release new videos about investing, trading and the stock market. Alright, so let's first take a look at the reason why DocuSign stock plunged from here to over here on its earnings. If we take a look at this article by CNBC, we see that DocuSign most recent earnings was 58 cents per share versus 46 cents as expected by analysts. And for revenue, DocuSign made $545.5 million versus $531 million as expected by analysts. So we see that for earnings and revenue for the most recent quarter, DocuSign has beat expectations. So why did DocuSign plunge on its earnings day? The main reason was because while DocuSign reported its previous quarter's earnings, it also issues its fourth quarter guidance. And for its fourth quarter guidance, it was weaker than expected. So remember, the stock market is a discounting mechanism. It is forward-looking, so it does not take into account the past and the present. So moving forward, investors don't really care about how DocuSign stock has performed in the past. They only care about how DocuSign stock is going to perform in the future. And the future doesn't seem very rosy for DocuSign stock based on its own guidance. So that's the first main reason why DocuSign stock plunged on its earnings day, because of its weaker than expected guidance for the fourth quarter. The second reason is over here. So it mentions that DocuSign just reported its 6th straight period of revenue growth in excess of 40%, benefiting from remote work and the increased use of electronic signatures in more industries. But for the final 3 months of the year, growth is expected to come in at around 30%, which CEO Dan Springer acknowledged as a disappointment after exceptionally high growth rates at scale during the first half of 2020. And that's the thing about growth stocks. As long as earnings continue to increase and improve, the stock will perform well, and generally it will perform relatively better than other stocks. But the moment growth slows down for these growth stocks, these stocks tend to decline by a lot and very quickly. And that was what we saw with DocuSign stock. So those are the two main reasons why DocuSign stock plunged after its earnings. Now let's take a look at DocuSign stock chart. So if we zoom out, we see that over at this point over here, DocuSign was forming a base and it broke out over here. But after it broke out, it encountered some resistance at this price level of around $311. It tried on 3 occasions, but it couldn't break above that level. So this was the first occasion that it tried to break above that level. It couldn't break, and then this was the second time, and then this was the third time. And then on the third try, DocuSign declined over here and it broke below the support over here at this price level of around $261. So it broke below that level, but it managed to find support at the 200-day moving average and it rallied back up. But you can see over here, the 50-day moving average acted as a resistance for DocuSign stock. So as DocuSign stock reaches the 50-day moving average, it encounters resistance and it declined from there. It couldn't break above the 50-day again, and then it declined below the 200-day moving average, and over here it found resistance at the 200-day moving average. And that was the final warning sign before DocuSign stock plunged over here. So at this point over here, should you buy DocuSign stock? Personally, I wouldn't go anywhere near DocuSign stock right now just based on this one reason. And the reason is because of this huge selling volume on this day over here. If we just zoom out and take a look, so DocuSign stock IPO over here, and then this is where we are currently at. And if you take a look at the volume on this down day over here, you see that the volume on that day was the highest it has ever been since its IPO. And this biggest volume on the down day indicates to us that big institutions are selling their DocuSign stock. So right now over here, if you decide to buy DocuSign stock after the big institutions have already sold their positions in DocuSign stock, you are very likely to face one of these two situations. The first situation is that DocuSign stock continues to decline from here. So if you buy DocuSign stock, your stock will decrease in price in that situation. For the second situation, if DocuSign stock don't decline, it is very likely that DocuSign stock will move sideways for an extended period of time. So in that situation, even though you are not losing money, your money is tied up to a stock that is unlikely to give you much returns from there. And that's why I'm not going anywhere near DocuSign stock right now. Those are also the reasons why you should sell your stock now and take a loss. So this is just my opinion and should not be construed as financial advice. If you decide to act on this information, make sure you do your own due diligence. And you can thank me in a couple of weeks' time. So that's my DocuSign stock analysis. Hopefully you have enjoyed and learned something from this video. If you did, smash that like button because it will really help the channel grow and allow me to produce more content such as this. If you want more weekly stock ideas and tips, make sure you join my Facebook and Telegram groups. I included the links down in the description below. I'll see you in the other videos to your financial success.